What is up? Welcome back to another video. Now this is going to be a video on everything that you need to know about the ICT silver bullet trade. Now this is a extremely good trader model. It's one of ICT's most popular trader models, as he has gave every point that you need to know how to trade it. So today I'll be going over that and showing you my silver bullet strategy that works, has a very high win rate and a very good risk to reward. So there are 3 times in a day that you can trade the silver bullet, but I mainly trade the 10 a.m. to 11 a.m. silver bullet and the 2 p.m. to 3 p.m. silver bullet. Now the times are extremely important because you only can take the trades if it is in this time zone. If the trades are outside of this time zone, then it is not a ICT silver bullet trade. Now when it says 10 a.m. to 11 a.m. you can take trades from 9:50 just because that is when the macro starts. There is a macro from 9:50 till 10 past 10. Now if you don't know what a macro is, all that is just a time where price will give you some volume and most likely be a clean price action. So let's jump straight into it. So first of all, when you are looking for the silver bullet model, you want to target opposing liquidity. Now what I mean by that is, let's say for an example we have this price action here, which is the most recent Thursday. So as you can see, before our 10 a.m. window, so let me just label this for you guys. This is the 10 a.m. till 11 a.m. So as you can see, this is the 10 a.m. till 11 a.m. window, and before this happens we have price action here. So from 9:30, which is right here, this is candle open, we have this big up move. Now what target opposing liquidity means, all it means is if we are trending upwards, then our silver bullet that we're going to be looking for is going to be a short position. And then obviously if we were trending down before the 10 to 11 a.m. time period, our silver bullet trade would be a long position. But for this example, the silver bullet trade would be a short position. So let's just jump in replay and I will show you how to find the silver bullet trade. So as you can see, we have upwards movement, and then 10 a.m. comes. So this is when we will look for our silver bullet trade. We keep playing the charts out, then we get this small fair value gap created, but there is not really any displacement. So once you are looking for the silver bullet trade, you need to have strong displacement. If you don't have string displacement with the silver bullet trade, then it is not the silver bullet trade. And what displacement is just a strong candle or a strong few candles that show speed. And as you can see, that is not really a strong down candle, and we retract straight upwards. And then if we play at the price action, we get this big down candle, which is our displacement candle. So if this trade was to create a fair value gap, now I hope all you know what a fair value gap is, but if you're new to ICT, all a fair value gap is just an imbalance in the market. So you look for 3 candles. So here we have 1, 2, 3 candles, and the first and the third candle you can't be touching. So as you see here, this first candle here and this third candle here are not touching. So this would be the silver bullet trade. Now where would we enter? We would enter once we have a retracement into this silver bullet trade. Our stop loss would be buy side liquidity. So this would be our stop loss right here, buy side liquidity, and then our take profit would be sell side liquidity. So as you can see here, this is a nice 1 to 4.75 trade, which is an amazing risk to reward once trading. So this would be our target. Now if you're confused why this is our target, I'll quickly explain this to you. So once you are using the silver bullet trade and you've got your entry, so we have our displacement down targeting opposing liquidity. Now what I mean by liquidity is where stops lie in the market. So as you can see, we have our 930 candle, which is our most recent swing low. This 930 candle is the most recent swing low that is prominent in the market and where lots of liquidity will be lying. We also have these equal lows down here, which we could also target. But that is just up to you after your back testing. I personally like to just target the most recent sell side liquidity. So here it would be the 930 candle open. So this would be the target. And then if we play at the price action, as you can see, we would have got tapped into our entry right there. We would have got this big move down, but then price would have retraced back into our entry. And with the silver bullet trade, I never put my stop loss to break even. That's just my personal way of doing it. If you are more comfortable with putting your stop loss to break even, then you can. But once I trade the silver bullet, I very rarely put my stop loss to break even. And yeah, if we play at the price action, as you can see, we finally get that move breaking both sell side liquidities. So this would have been a winning trade. So as you can see, this would have been a nice winning trade. I'll quickly go over the steps for you again, just so you are more familiar. So there are 3 main steps when it comes to trading the silver bullet. You need to make sure that there is displacement. Now all displacement is just a strong move to the downside or to the upside, showing willingness to go in a certain direction. So it's just speed. As long as there is speed and a strong candle, then that is your displacement. Very easy to find. And then obviously you need your fair value gap entry. So all a fair value gap is just an imbalance in the market where price has not filled. So there is a fair value gap. Let me give you another example of a fair value gap. There's also a fair value gap here. As you can see, 1, 2, 3 candles. The first and the third candle are not touching. So that is a fair value gap, just to give you guys an example. And then you also need to be targeting the opposing liquidity. So targeting opposing liquidity. Now obviously you need to make sure that you're trading in the silver bullet time zones, because that is the most important. This is going to be the difference between getting a very high win rate and a very low win rate. If you take this trade without listening to the time zones, then you will not be profitable and your trades will most likely lose. You need to make sure that your trades are in this time macro. So yeah, I hope this video helped. If you did enjoy the video, make sure you subscribe to my Instagram, and